As someone who's been a dividend and an income investor for almost a decade at this point, I can honestly say that I have no regrets about choosing my style of investing. Rather than hoping a line on a chart goes up over time, I'm a lot more motivated to see my investments pay me cash directly into my brokerage account. I can either reinvest my money back into buying more shares of my holdings, thus growing my payout the next time it pays, or on occasion, I can easily have my dividends go right into my bank account and use the money to reward myself. I've always found that just easier than selling shares of a holding, as the cash I receive is already paid to me and I can do whatever I want with it. I also like having it as a safety net. If something were to happen where I needed extra money from an ongoing expense, I have an additional source of income on standby that I can use, my dividends. But despite my love for dividend investing, I do have to admit that not everything is perfect about it. There are some downsides that dividend investors like me face with this style of investing. And if you're a dividend investor, you've likely felt these struggles at some point, or you will if you're considering dividend or high income investing yourself. So my goal for this video is to go over what I think are the biggest headaches and discouragements that come with dividend investing and go over some steps that you can do to make sure that you don't give up on building a dividend portfolio that you can retire off of. Getting started, I think hands down the worst part of being a dividend investor is that progress can be pretty slow in the beginning, especially if you don't have a lot of money to invest. If you're investing $100 a month into a monthly paying dividend stock, you're likely only receiving a few cents to $1 or so each month. For many people who are drawn to this style of investing, who love the idea of passive income, they often get very discouraged and walk away from dividend investing after just a few months to a year, because they don't think they'll ever earn a meaningful amount of dividends in their lives. Sure, it might be a safer strategy of building wealth than something like day trading or short-term trading, but the majority of people who enter the stock market do so because they dream of achieving a luxurious lifestyle. So after collecting their pocket change or a couple of dollars each month, a good number of people will walk away from dividend stocks because it's just too slow in their opinion. And what makes things worse that I've seen is that many people will often switch to much more aggressive stock investing strategies after quitting dividend investing to try and get rich much faster. And so what they do is they often take up penny stocks or bio stocks or day trading, and they just want to build wealth much faster after experiencing dividend investments. They think it's worth the risk, but it's ultimately very foolish. There are so many studies that prove that day trading and short-term trading do not result in profits for the vast majority of investors. And the exact same thing is true for people who invest in penny stocks and other highly speculative companies. According to one study, only 7% of day traders continue to day trade after 300 days, and only 3% of day traders report making any profit at all. Remember, that's just making a profit, not people who actually beat the market. All of these people on social media who are trying to sell you a day trading course or sign you up for trade alerts or some other special platform that they've already created are deceitful. If someone was making 20 or 30% gains every year in the stock market, why would they want to tell anyone? And why would they sell you that secret for $100 or $500 or take the time to build out a course or a platform? That would ultimately distract them from earning more money in the market. None of the most successful investors in the world are day traders. This is why it's really important to stay motivated when you're a dividend investor, especially in the beginning, because as I've described in the past, the dividend snowball takes time to accumulate. The longer you stay invested, the more your money compounds. I would strongly recommend every dividend investor use a dividend tracking platform, one that gives you projections on your future dividend income. I recommend using trackyourdividends.com, which is what I use. It's free and I'm not sponsored by them. They give you projections on what you can expect to earn in dividends, as well as have a future tab, which shows how much you're projected to earn in 5, 10, 20, or 25 years in the future, and you can also input things like annual contributions. This helps immensely when it comes to staying motivated and staying on track with dividend investing. Also be sure to write down how much you're making in dividends every month, and over time you will see this number go up. This is how you keep going in the beginning when progress seems slow. A second obstacle that I regularly encounter is that dividend, but more so income investing, is not that popular compared to other investing strategies. If you talk to your neighbors, family, friends, and coworkers about the stock market and investing, you're unlikely to meet anyone who loves dividends or higher yielding investments. Everyone knows Tesla, Nvidia, Amazon, and Apple, and most people know Palantir, Coinbase, and Oracle. But you're unlikely to come across anyone that's a fan of Ares Capital or Enterprise Product Partners or any closed-end fund whatsoever. This is because, talking about income investing, it's not mainstream, and there's a major lack of knowledge and information available out there about it. That's despite dividends accounting for the majority of stock market returns over the years. One of the reasons for this is because everyone's been rushing into tech stocks. These have been very fast growers, and some of them have a history of doubling in value in a short amount of time. And given the fact that we're now entering the AI craze, I don't see investors abandoning tech stocks anytime soon. There's still a lack of resources and communities that exist for people who prefer dividend and high-yield investing. What I found is that when you have people around you with the same goal, which is living off dividends, you're a lot more likely to stick to it. Finding and being part of a dividend community, or simply just knowing any other person really well who invests this way, is really beneficial. There's a handful of communities that exist on places like Reddit, Seeking Alpha, and even here on YouTube in the comments section. Joining in on a dividend conversation and getting to know people who invest in this exact same way makes you feel more focused, which I've definitely found to be really motivating over the years. This next obstacle really depends on a couple of factors, but it has to do with taxes. This is the biggest complaint for some people about dividend and income investing. It likely prevents more people from starting dividend investing than anything else, and there are really two big things that you can do right away to eliminate or alleviate the tax burden if that's what you're concerned about. Your first option is invest only inside of a Roth IRA, where you'll never have to pay any taxes on your dividends. The only exception to this rule is if you earn more than $1,000 per year from a master limited partnership. That you will be taxed on. But other than that, no taxes ever on your dividend income. Your second option is you can focus on qualified paying stocks and ETFs. So right away, these two things solve the biggest issue that some people have with dividend or income investing. I'll likely dedicate an entire video to this topic because it really discourages a certain number of people from even considering this way of investing. Nobody ever turned down a promotion, a bonus, or a salary increase from their job because they would have to pay more taxes on it. But again, if it bothers you that much, then I would suggest investing inside of an IRA. Despite dealing with taxes, it's worth having an extra source of income for me. I think it's silly to reject another income stream in your life just because you don't want to pay taxes on it. Ultimately, however, it's a decision that you'll have to make. You do have to be dedicated and really like this way of investing. And there's nothing wrong with other forms of investing like index funds if that's your own personal preference. But hopefully this video helped if you've ever had any of these issues, or if something that I mentioned is holding you back from trying dividend investing. Let me know if you've ever encountered any of these discouragements or if there's another one that I missed. But with that being said, that's going to wrap up today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.